Right, that's a consumption pulse on how the Westlife sales are actually panning out, or West Side sales are panning out. Well, let me also welcome on board Nidhu Saxena, MD and CEO of Bank of Maharashtra, and talk about how their numbers have been. Mr. Saxena, good to have you on the show. Your FY26 margin guidance, I want to start off with that first. Currently at 3.75%, can it really surprise on the upside going forward? What's the quarter gone by telling you?
Good morning. And yes, this quarter is yet another performance quarter where we have outperformed the industry, beating our own guidance consistently. And coming back to your question on the NIM guidance for this FY 25-26, we have a NIM guidance to maintain it at 3.75. For this quarter and half year, we have done 3.85, and a couple of headwinds are there and couple of tailwinds are there, which we see. Headwind, if there is a rate cut in the December quarter, if that is happening, that is going to have some bearing on the repo-linked portfolio, which is around 40% loan book is linked to repo with us. The tailwind, I would say, again, enabler has come from the regulator. The CRR cut is going to have some bearing. We have done our calculations. On and on 6 bips, we will have the benefit from CRR cut itself. Over and above that, we are also focusing on improving our net interest income, and CD ratio, if you see, on an average basis, 75 to 77 last year, we are maintaining it at 80 to 82%. So with the improvement in CD ratio, CRR benefit, also I will see most of my deposits have repriced. So going forward, we can expect further positivity, but I would like to maintain at conservative level a guidance of 3.75, which has been our guidance number we shared in the beginning of the year, and we will stand by that.
Mr. Saxena, trying to get a sense, therefore, hi, this is Harsh here, good morning. Trying to get a sense here, therefore, does Q2 see a bounce back with regard to margins? Because that seems to be the sense I'm getting.
So, Harsha, we had done our calculations with 100 bips rate cut, repo cut. We would have 18 to 19 bips come down on the NIM, but there are certain other things that we could have done, and we did those. And my NIM contraction has not happened to that extent. March 25, we were 4.01. We came down to by 6 bips in the Q1 and 3.85 now. So I think going forward, the Q3 and Q4, if there is no rate cut, as I just mentioned from the regulator, then we may see for system benefiting, because by that time, the deposits would have repriced completely. And we can, the Q3, Q4 are best business quarters also. We would see improving CD ratios. And I think with kind of focus we at the bank are keeping on the profitable business, my NIM should be improving. Definitely, we should not slide down further, but I will still like to maintain at a conservative level, 3.75, which is again is a decent number we feel, and we would like to stand by the guidance that we have given.
Okay, good to hear that. Also wanted to really understand, what exactly is the glide path for the next 5 years? What kind of loan mix, for instance, are you going to clock in?
Yeah. So for the next 5 years, if you ask me, we have done a paper to our board in the strategy meet, and we wish to grow our book at a CAGR of 14 to 15%. Total business should increase. We should be, we aim to cross the 10 lakh crore business mark by that 5-year glide path. Within this 15%, of course, the credit growth should be around 16 to 17, deposit around 14, 15, and we will have some alternate sources of raising funds raising the raw material where we find it is being cost beneficial to the bank. To have this kind of a support system, a lot of enablers have been already initiated in this financial year itself. Over a board approval of opening 1,000 branches in the next 5 years, we have launched aggressive or ambitious initiative in this FY itself to open 321 branches in the potential growth center of the country, using a lot of scientifically deciding at the pin code level where our next branch should be opening. This would be another big enabler. We have got our GIFT IBU, GIFT City branch operational in this quarter. And in less than 6 months from the Reserve Bank of India granting approval to us, we have made that branch operational. We have done $100 million business. It is 888 crores. And I think this is just the beginning. We are creating a strong pipeline in the GIFT City branch also. We aim and aspire to be a 1 billion kind in next 12 months. So that's how I think we are going to be growing at 15% CAGR, and 5 years should be 10 lakh crores. To sustain and support this kind of growth system, we are going to be making the structure strong. So we have done structurally a lot of foundations are built strong to see that the governance, the compliance culture, and the overall sustainability of this business can happen only if you are growing in a compliant manner.
Right.
So we have done a lot of skill set recruitments to strengthen our risk compliance functions. Even our GIFT IBU talent skill sets, which are internally not available, we have onboarded those skill sets and just made the bank support this kind of growth that we have shared with you.
Understood. Sir, credit where credit is due. Y'all have done enough with regard to how the progress of the bank has been. But talk to us about looking forward. The ECL implementation. It's going to happen starting FY27 for a period of 4 to 5 years. You've already guided in your con call yesterday that it's going to have an impact of around 2,500 crore on your provisions number incrementally. Talk to us about how you're going to how you're planning to spread that out over the period available or made available to you by the RBI.
So you rightly pointed out the number, the calculations as of now indicate us incremental provisioning of 2,500 crores. But as we all are aware, RBI doesn't wish to have any disruptions, and there's a glided path available. This provision has to be built up by 2031. Once the guidelines come into force from 1/4/2027, so by 2031. So going by that, I have a quarterly requirement of 100 to 125 crores that I need to build the ECL provisions. I have already 250 crores in my balance sheet, and we are already having a lot of cushioning and comforts, extra buffers and provisions in balance sheet. I see absolutely no challenge in meeting the regulator requirements of provisioning towards ECL, which would be able to carve out that kind of provision quarter on quarter from our operations itself.
Thank you so much, Mr. Saxena, for coming in and speaking with us. A larger conversation surely warranted. The way in which both the stock price has moved as well as the business performances, have to give you credit for that. But sir, we will have that conversation because we're out of time on this edition